Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I will discuss some potential overseas posting examination questions and their corresponding sample answers for bankers. Today marks part 7 of my Path to the Corner Office series for overseas posting examination questions and their corresponding sample answers for bankers. Now MCQs from pre-shipment and post-shipment finance. An exporter ships goods under a CIF contract to a buyer in Germany. The exporter's bank negotiates the LC during transit and the ship sinks. Which party bears the loss? A. The exporter, since the goods have not been paid for yet. B. The issuing bank, since it opened the LC. C. The importer buyer, since under CIF risk transfers to buyer at port of loading. D. The confirming bank, since it guaranteed the payment. The answer is C, the importer, buyer, since under CIF risk transfers to buyer at port of loading. The next question is a bank that has purchased an export bill, site no LC, finds that the overseas buyer has gone bankrupt before payment. Under which arrangement can the bank recover its loss? The options are option A, the exporter is liable since purchase is with the recourse. B, EXIM bank automatically covers such losses. C, the issuing bank must pay since it was an LC transaction. D, RBI reimburses the bank directly. The answer is option A, the exporter is liable since purchase is with recourse. The next question is under a confirmed irrevocable LC, the if the issuing bank in the importer's country fails insolvency, the exporter's risk is covered by option A UCP 600 provisions for automatic payment, B the confirming bank's independent undertaking to pay, C ECGC standard policy for buyer default, D the advising bank's obligation. The answer is option B the confirming bank's independent undertaking to pay. The next question is an exporter presents documents under an LC, but there is a discrepancy. The invoice shows machine parts while the LC says spare parts for machinery. The issuing bank, option A, must pay since the goods are effectively the same. B, has the right to refuse payment on grounds of discrepancy. C, must seek clarification from FEDAI before deciding. D, must pay but can claim back from the confirming bank. The answer is option B, has the right to refuse payment on grounds of discrepancy. The next question is which of the following statements about a standby letter of credit is correct? Option A, it is a primary payment mechanism like a regular LC. B, it functions like a bank guarantee and is invoked only if the buyer defaults on underlying obligation. C, it is commonly used for bulk commodity trade. D, if standby LCs are governed by URC 522, not UCP 600. The answer is option B, it functions like a bank guarantee and is invoked only if the buyer defaults on the underlying obligation. Next question is a shipment under consignment basis means option A, title gives to the buyer on shipment date. B, the exporter retains ownership of goods until the consignee sells them. C, the importer pays in advance and takes ownership before shipment. D, the goods are pledged to the bank for packing credit. The answer is option B, the exporter retains ownership of goods until the consignee sells. The next question is which of the following correctly identifies the HS? Option A, it is India specific and not internationally recognized. B, harmonized system code and internationally standardized classification for goods and used in customs and trade statistics. C, a code issued by ICGC for classifying export risk. D, a code used by EXIM Bank to classify export credit tenor. The answer is option B, harmonized system code and internationally standardized classification for goods used in customs and trade statistics. The next question is international factoring is governed by the rules of A. ICC UCP 600, B. FCI Factors Chain International, D. FEDAI, C. UNCI TRAL. The answer is option B. FCI Factors Chain International. The next question is a bank providing packing credit must periodically verify goods through option A issuing banks confirmation only, B exporter self declaration without any bank verification, C stock statements submitted by the exporter and possible physical inspection of premises, D ECGC's quarterly audit. Answer is option C stock statements submitted by the exporter and possible physical inspection of premises. Next question is the ITCHS code used in India for trade classification is based on option A India's own independent tariff structure with no international link, B the internationally agreed harmonized system with additional Indian subdivisions, C codes assigned by EXIM Bank for trade finance categorization, D codes issued by ICC for documentary credit purposes. The answer is option B, the internationally agreed harmonized system with additional Indian subdivisions. The next question is an exporter with a running account packing credit facility draws funds but does not submit a specific export order within the prescribed period. The consequence is option A, the credit is automatically converted into a term loan, B, the drawing becomes irregular, penal interest may apply, and the drawing loses its status as export credit. C. The credit is reported to ECGC for cancellation of cover. D. The DGFT cancels the exporter's IEC. The answer is option B. The drawing becomes irregular, penal interest may apply, and the drawing loses its status as export credit. The next question is pre-shipment credit extended for advance against exports on consignment basis is considered riskier because A. The goods have already left India before the credit is given. B. There is no confirmed sale. Proceeds depend on the consignee eventually selling the goods. C. Consignment exports are prohibited under FEMA. D. ECGC does not provide cover for consignment based exports. Answer is option B. There is no confirmed sale. Proceeds depend on the consignee eventually selling the goods. The next question is a group age or consolidated bill of lading is used when A single exporter ships multiple containers on the same vessel. B. Multiple exporters consolidate their cargo LCL less than container load under 1 BL. C. A government agency consolidates all export documents. D. A shipping company uses a combined BL for sea and air legs. The answer is option B. Multiple exporters consolidate their cargo LCL less than container load under 1 BL. The next question is which of the following is the correct sequence of events in a typical LC based export transaction? A. Shipment, then LC opened, then documents presented, then payment received, then packing credit liquidated. B. LC opened, then packing credit availed, then shipment, then documents negotiated, then packing credit liquidated from negotiation proceeds. C. Packing credit availed, then LC opened, then payment received, then shipment, then documents presented. D. Shipment, then packing credit availed, then LC opened, then documents negotiated, then payment. The answer is option B. LC opened, then packing credit availed, then shipment, then documents negotiated, then packing credit liquidated from negotiation proceeds. The next question is a charter party bill of lading is sometimes not acceptable under an LC because A. Charter party bills are issued only for bulk cargo and many may contain terms inconsistent with LC requirements. B. Charter party BNLs are issued by the exporter and not the carrier. C. UCP 600 prohibits all charter party BNLs in LC transactions. D. Charter party BNLs cannot be endorsed. The answer is option A. Charter party B&Ls are issued only for bulk cargo and may contain terms inconsistent with LC requirements. The next question is FIEO, a Federation of Indian Export Organizations, is best described as option A, a government body that regulates export pricing, B, the apex export promotion body representing the Indian interests of Indian exporters, C, a bank specializing in export finance, D, an insurance company for export risks. Answer is option B, the apex export promotion body representing the interests of Indian exporters. The next question is when an export bill becomes overdue, proceeds not received within permitted period, the AD bank is required to option A, immediately write off the bill as a loss, B, report it on ADPMS and pursue realization, penal interest applies, C, transfer the bill to EXIM bank for recovery, D, cancel the exporter's IEC code automatically. Answer is option B, report it on EDPMS and pursue realization, penal interest applies. The next question is a manufacturer in India supplies goods to an EOU export oriented unit within India. For export finance purposes, this is treated as A domestic sale with no export credit eligibility, B a deemed export eligible for packing credit at concessional rates, C an indirect export eligible only for post shipment credit, D a deemed export import from the EOU. The answer is option B, a deemed export eligible for packing credit at concessional rates. The next question is the term without recourse in the context of post-shipment bill purchase means option A, the bank cannot collect interest from the exporter, B, if the overseas buyer fails to pay, the bank cannot recover the advance from the exporter, C, the bill cannot be endorsed or transferred, D, the bank does not need ECGC cover. The answer is option B, if the overseas buyer fails to pay, the bank cannot recover the advance from the exporter. The next question is which of the following combinations is correctly matched? A. UCP 600 to international collections, UC5, URC 522 to documentary credits. B. UCP 600 documentary credits LC, URC 522 in international collections. C. Incoterms 2020 documentary credits, UCP 600 trade terms. D. ISBP 745 Incoterms, URC 522 documentary credits. The answer is option B, UCP 600 to documentary credits, LC and URC 522 to international collections. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.